so many doubts, so I'll do it. Messrs Platinum Limited has decided to reconstruct the balance sheet since it has accumulated huge losses. The following is a balance sheet of the company as on 31st March 2014 before reconstruction. Goodwill, land and building, machinery, computers, inventories, trade receivables, cash at bank, P&L account, debit balance. Share capital 50,000 shares of 50 each fully paid of 25 lakh. 1 lakh shares of 50 rupees each 40 paid of 40 lakh. And then capital reserve 5 lakh, 8% debentures of 100 each 4 lakh, 12% debentures of 100 each 6 lakh, trade creditors 12 lakh 40,000, outstanding expense 10 lakh 60,000. Asset side, goodwill, land and building, machinery, computers. Please put a dot at goodwill. Inventories, trade receivables, cash at bank and P&L account, debit balance. Put a dot at P&L account also. Following is the interest of Mr. Shiv and Mr. Ganesh and Mrs. Platinum Limited. Mr. Shiv, holder of 8% debentures and 12% debentures. Mr. Ganesh, holder of 1 lakh worth of debentures and 2 lakh worth of debentures, 8%, 12% interest. The following scheme of internal reconstruction was framed and implemented and approved to the court and concerned parties. 1. Uncalled capital is to be called up in full and then all the shares are to be converted into equity shares of 40 each. Write down the entry. When uncalled capital is received, please tell me what is the amount of uncalled capital in the problem?
10 lakh.
Uncalled capital in the problem. See the balance sheet. How much capital is uncalled?
10 lakh.
On 1 lakh equity shares of 50 rupees each, only 40 is paid up. So now we are going to call that 10 rupees. 1 lakh into 10. How much is it? 10 lakh. Write down the entry. Bank account, debtor to equity share capital account, 10 lakh. First entry. Bank account, debtor to equity share capital account, 10 lakh. Next. And then all the shares to be converted into equity shares of 40 rupees each. Equity share capital of 50 rupees each. Account debtor. Now tell me what is the total amount now? 25 lakh is already there, fully paid up. 40 lakh plus 10 lakh, totally 50 lakh. 50 plus 25 is how much? 75 lakh. Or else, calculation 1 lakh 50,000 shares at the rate of 50 paid up, 75 lakh. Now these shares are converted into what shares? Into shares of only 40 each. To equity share capital of 40 each. Account 1 lakh 50,000 into 40. How much? 60 lakh. Difference will be transferred to capital reduction. 15 lakh. Next. The existing shareholders agree to subscribe in cash fully paid up equity shares of 40 rupees each for rupees 12,50,000. The existing shareholders agree to subscribe in cash fully paid up equity shares of 40 each rupees for 12,50,000. So equity shareholders are pumping fresh money now in the company. What is the entry, right? Bank account debtor to equity share capital account of 40 each. How much? 12,50,000. Fresh equity shares are issued. Next. Third point. Trade creditors are given option of either to accept fully paid up equity shares of 40 each. See the balance sheet first of all. Trade creditors shown in the balance sheet is 12,40,000. Now we are settling the trade creditors. Trade creditors are given option of either to accept fully paid up equity shares of 40 each for the amount due to them, or to accept 70% of the amount due to them in cash in full settlement of their claim. So the creditors are given an option to either accept fully paid up equity shares of 40 each for the amount due to them, or to accept 70% of the amount due to them in cash in full settlement. So one option we are giving trade creditors: if you want full amount, accept equity shares. If you don't want full amount, if you want 70% of the amount, we'll give you cash. But 30% you have to forego if you want cash. Stop talking. Trade creditors for rupees 7,50,000 accept equity shares and rest of them opted for cash towards full and final settlement of their claim. Trade creditors for rupees 7,50,000 accepted equity shares and rest of them opted for cash towards full and full settlement of their claim amount. Okay. So now how I deal with that? Look at the board. What is the total amount of trade creditors? Please tell me. 12,40,000. Out of these creditors, how many opted for equity option? Equity option. Equity opted 7,50,000. Out of these trade creditors worth 7,50,000 have opted for equity option. Equity opted 7,50,000. Settlement. Some bought settlement. How much? 4,90,000. They will be paid how much in cash? 70% in cash and 30% capital reduction for company. Profit 3,40,3,000. 1,47,000. Now let us pass an entry. When trade creditors are settled, trade creditors account debtor 12,40,000, to equity share capital 7,50,000, to bank 3,43,000, and to capital reduction 1,47,000. Next, Mr. Shiv agrees to cancel debentures amounting to rupees 2 lakh out of total debentures due to him and agree to accept 15% debentures for the balance amount due to him. He also agrees to subscribe for further 15% debentures in cash amounting to rupees 1 lakh. So what I will do is, first of all, I will transfer all the debentures to his personal account, take fresh money from him and then allot him debentures. Is it clear? So what is the entry I'll write when debentures are transferred to Mr. Shiv account? Tell me the entry. %, debentures account debtor how much? 3 lakh. 12% debentures account 4 lakh. To Mr. Shiv 7 lakh. This is not the liability, only liability. He is again paying some money to the company, no? When amount is received from Shiv. When amount is received from Shiv. Bank account debtor to Mr. Shiv account. How much amount? 1 lakh. Now we know the total liability to Mr. Shiv. How much is it? 7 lakh plus 1 lakh, it is 8 lakh. How are we settling that 8 lakhs to Mr. Shiv? When Mr. Shiv's account is settled, Mr. Shiv account, how much? 8 lakh is settled now, 8 lakh. Out of this is foregoing how much? 2 lakh. 2 capital reduction, 2 lakh. For remaining amount he is going to get 15% debentures. 15% debentures, 6 lakh. Next. Next, come to point number 5. Mr. Ganesh agrees to cancel debentures amounting to rupees 50,000 out of total debentures due to him and agreed to accept 15% debentures for the balance amount due to him. Mr. Ganesh agrees to cancel debentures amounting to rupees 50,000 out of total debentures due to him. So Mr. Ganesh is agreeing to cancel debentures amounting to how much? 50,000 out of total debentures due to him and to accept 15% balance debentures for the balance amount due. First of all, whatever debentures Mr. Ganesh has, transfer it to his personal account. When debentures are transferred to Ganesh account, please tell me how many debentures, what type of debentures he has? 8% debentures account debtor, 1 lakh. 12% debentures account debtor, how much? 2 lakh. To Mr. Ganesh account, 3 lakh. When debentures are settled, when Ganesh account is settled, how much? Mr. Ganesh account debtor, 3 lakh. How much is foregoing? 50,000. To capital reduction, 50,000. To 15% debentures account, 2,50,000. 15% debentures. Next, 6th point, land and building to be revalued at 51,84,000. See the balance sheet value, land and building value 42,70,000. Now we are going to increase it to 51,84,000. Find the difference. 51,84,000 minus 42,70,000. How much is it? 9,14,000. You have to revalue the land and building upwards. Write on entry. When land and building is revalued upwards, I'll write on here. Land and building account debtor to capital reduction. How much? 9 lakh? 9,14,000 is the profit. Next, machinery at 7,20,000. Machinery at 7,20,000. See the book value. Book value is 8,50,000 and machinery value is only 7,20,000. So difference is how much? 1,30,000. You have to revalue it downwards. We can do the write-off later. How do you want to do it now? Okay, we'll wait. Put a dot there. Computers at 4 lakh. Computers at 4 lakh. Book value is 5,20,000. But you want to now revalue it to only 4 lakh. So you have to write down 1,20,000. So again downwards, put a dot there. Inventory 3,50,000. Book value is 3,20,000. We want to revalue it to 3,50,000 increase. So we can do it now. Inventory account debtor to capital reduction 30,000. Increase in value of inventory. Next, trade receivables at 10% less as to they appear in the balance sheet as above. So again we want to do a write-off. 10,90,000 to 10% is 1,09,000. We'll do the write-off later, put a dot there. So we have not written off the value of machinery, we have not written off the value of computers, we have not provided for bad debts. Outstanding expenses are fully paid up in cash. Outstanding expenses are fully paid in cash. Pass an entry. Outstanding expenses account debtor to cash account. 10 lakh or bank account. Outstanding expense account debtor to cash or bank account 10 lakh 60,000 when the amount is settled. Next, goodwill and profit and loss account will be written off, and balance, if any, of capital reduction account will be adjusted against capital reserve. Now, first of all, tell me how much balance are you left with in capital reduction account? Please tell me how much balance are you left with in capital reduction account? Capital reduction here 147, and then here 2 lakh. Here we have 50,000. Equity shares, how much do you get?
58 lakh.
I want an answer, boss. I'm asking you something. Tell me how much the capital reduction balance you have. We have not done any write-off till now, no? So we have a profit of totally 28 lakh 41,000. Okay. Now we have to start doing the write-offs. Let us start doing the write-offs. Write on. We'll write. No problem. When capital reduction is used to do write-offs. When capital reduction is used to do write-offs, capital reduction account debtor, how much amount is there in the capital reduction of account? 28 lakh 41,000. 28 lakh 41,000. Let us start writing off to machinery. How much you have to write off from machinery? 1 lakh 8 lakh 50,000 is a book value. We want to write off it to 7 lakh 20,000. So 1 lakh 30,000 has to be written off. To machinery 1 lakh 30,000. Next, computers. Computers, book value is 520, but revalued amount is 4 lakh. You have to reduce it by 1 lakh 20,000. So you write 2 computers, 1 lakh 20,000. 2 computers, 1 lakh 20,000. Trade receivables, we have to provide how much? 1 lakh 9,000. 2 trade receivables, 1 lakh 9,000. 2 trade receivables, 1 lakh 9,000. 2 goodwill. Write off the entire amount to goodwill. Write off the entire amount to goodwill, 22 lakh. Tell me, is there any amount left for writing off of P&L account? How much is left to write off P&L account? 2 lakh 82,000. You write to P&L account to the extent possible, balancing figure. To extent possible, to profit and loss account, extent possible, balancing figure, how much? Only 2,82,000. Out of 2841 capital reduction profits, we use some amount to write off value of machinery, we used to write off some value of computers, we used to provide bad debts, we use the amount to write off goodwill, we also use the part of the amount for writing off of P&L account balance, 2,80,000. Now please tell me, what is the total P&L account debit balance? 7,82,000 is the total debit balance. Out of that we have used, we have written off 2,82,000. 5 lakh more is left, adjusted against capital reserve. Write down. Balance P&L account debit balance is written off against capital reserve. The balance in the P&L account, is written off against capital reserve. Capital reserve account debtor to P&L account 5 lakh. Capital reserve account debtor to P&L account 5 lakh. I think capital reserve is also exactly equal to 5 lakhs. You can do it. See, the problem specifically said goodwill and P&L account will be written off and balance, if any, of capital reduction account will be adjusted against capital reserve. You can do it the same way also, that way also, no problem. Or one more way is transfer capital reserve balance to capital reduction and then write off using capital reduction account. So we'll have a break now for 15 minutes, then we'll continue.